Well, hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin, I am a professional trader and a developer of pattern search software. If you guys are new, what I'm doing here, I'm looking at some good opportunities that may happen next days, as well as I explain some aspects of technical analysis and psychology of trading. And now let's go straight to the charts. Alright, and the pair I'm going to analyze is Pound Canadian. What we have on Pound Canadian is called a downtrend. What is a downtrend? A downtrend is a tendency of price to move lower. It consists of a series of lower lows followed by lower highs. Guys, you need to know the definitions of that. If you don't know this definition, then stop trading immediately. Invest some time into your education. Learn all these things by heart. It should become your second nature. Master them to perfection during your backtesting, and only then you can try to invest some real money into trading. Okay, so we had initial high, initial low, then we had an outside return, and then we had a new structure low. What is a new structure low? It is a low that has a candle close below the previous low. Then we had an outside return, another new structure low. You can see that. Candle close below the previous, another outside return, and another candle close below the previous low. Since then we are consolidating within that last swing, last impulse to the downside. I mark this range with this blue rectangle. We are consolidating within this last swing. We failed to close below the previous low. Yes, we only had an open price, but still we are consolidating. So no matter what type of price action we have here within this blue rectangle, it will all be considered a correction to previous impulse, to previous swing. So when this correction ends, what we typically have, we have a continuation of a tendency, because it is a tendency. We most likely have this continuation, then this breakout to the upside. Okay, hope you understand this. So the identification part of my analysis says that we are bearish. The prediction part says that we will most likely continue the bearish trend. So let me switch to my trading timeframes to find some reasons for entry. As you guys might know, I am an advanced pattern trader. I only trade advanced patterns. I trade nothing else. And in this case, I am looking for a bearish advanced pattern. And I see a pretty wonderful bat advanced formation on 4-hour time frame. Let me draw it for you. I will use my manual pattern search indicator to draw the pattern. X to A to B, B to C. Okay, done. The pattern is drawn automatically. It also places the stops and the targets. You should keep in mind that these targets are initial targets. Let me tell you a bit more about this pattern. First of all, the pattern is completed at this point, which is 886 of X to A. This second blue arrow price. Only then the pattern is completed. Before that, we just wait. We don't trade it to the upside. Keep this in mind. Okay, second, if price goes to hit this level, which is exactly 90% of CD leg completion, this second blue line, and then it reverses and hits the first targets, so the pattern is considered to be working earlier. So it should not be traded in case we have a continuation of this kind. It should not be traded, because in many cases, in most cases, we will have that price action and hit the stop loss. If you guys have this rule will save you lots of losers. So if the CD leg is completed 90% and then you had that reaction that hits the first initial target, this means that the reaction started earlier and you should not re-enter even if the price goes to complete the pattern 100%. Okay, this invalidates the pattern. You shouldn't trade it in this case. Okay, if we have the movement this way, violating the C, and then price goes to complete the pattern, you shouldn't trade it as well. You shouldn't draw the pattern this way, something like that. Let me draw it. So this is not correct. In this case, you will most likely have a loser. Sorry. Let me delete those triangles. Okay. Why is it so? The rule says that you should only have one swing in each leg. XA should be one swing, A to B should be one swing, and B to C should be one swing. Of course, it depends on your swing identification algorithm, and if your swing identification algorithm is sensitive enough, you can say, "Oh, Alex, we have 3 swings in this A to C leg, B to C leg, yes?" Well, depends on your swing identification algorithm. But according to my swing identification algorithm, the AB should be here, it should not be here. Because in this case, AB movement will be that zigzagging movement. It will contain few swings, several swings, not only one swing. Okay, this is the second thing that may invalidate the pattern. Okay, and another thing you should know before you start trading is the target adjustments. After the pattern is completed, when price goes to complete the pattern, and then it goes somewhere in this area, somewhere here, and then the reversal takes place. Yes, you should adjust your targets. You should restretch your Fibonacci and place your first target to 382 and your second target to 618. Should keep this in mind. And if price goes further, then you should restretch your Fibonacci further, and you should adjust your 382 and adjust your 618. Understood? Hope you did. Let me redraw the pattern so you have initial targets and entry and the stop loss. Well, that's it about this bad advanced formation. Hope you like it.
Okay guys, so I hope you found this video useful, and if you did, please hit that like button, share this video on social media, and subscribe to my next episodes. Have a good day.